Now, tariffs are like the biggest talk. So there's no more economic uncertainty. There's just conclusion on what happens with the tariff. So can we really experience a drop-off like this again? Even war isn't pushing us down at this point. If anything, it's just profitable, right? So it only makes sense to climb these higher thousands when we talk about the Nasdaq, because it has to do with all those companies I just showed you. Apple, Google, Meta, Nvidia, and all of those companies are used in everyday technology for entrepreneurship and America, and that's where we're investing our money, because that's where our consumers are spending money as well. So if all that makes sense, that's why we're up here, and we can't just think that this is an all-time high and we have to completely dump. So overall, the bias is still bullish, but that doesn't mean you just look for buys every single day, because again, we're hanging out on 23. So Chinese tariff started really far away from here, actually, like back in 20,083, so around over here. This gap was created because Trump said he was going to negotiate tariffs with China, and that was going to be a 90-day deal. And right now, we actually got him to decide yesterday that he was going to do an extension, and all of this is the initial response for that tariff deal going through. And then all of this is correlation to a lot of stocks that are involved in the Nasdaq. So we trade the Nasdaq. This is an exchange traded fund, meaning it's made up of a bunch of real companies, but these are handpicked by the Nasdaq fund. So we'll look at a few of them, right? Apple been getting a lot of bad news. Meta's been getting a lot of good news. And these are like two top holdings in the Nasdaq. So this will be a little bit off topic of the futures, but just for like 2 minutes, and then we'll get right back to trading. So here's Apple on your 4-hour chart, and this, just take a little mental snapshot of it, right? Here's the all-time high for Apple. That was back in December, right? Trump ended up taking on in January, tariff announcement here. And then we have the April experience there. And then we had China tariffs, which I believe was here, this gap. So they're still stuck in this range. So that's Apple, right? Take a mental picture of this. This is how far the high is from it. Now, let's go look at Meta. They're really pushing the AI industry right now. This is Meta's all-time high, right? So Apple's pretty far away from all-time highs, but Meta, we're actually pushing and very close to the all-time high. Here's Nvidia, which also just became a $4 trillion company as of yesterday. That's at an all-time high as well. And then the last company we're going to look at is Google and Microsoft, actually. Let me add that to the list. So here's Google, kind of in the same boat as Apple as well. Here's the all-time high for Google. So Apple and Google are lagging, while Nvidia and Meta are pushing the highs. And then last we have Microsoft. I think Microsoft is also pushing some highs as well. Yeah, Microsoft's killing it. So all these companies are pushing highs, but Apple's a pretty big company and Google's a pretty big company, and they are not pushing the highs, whereas Meta and Nvidia and Microsoft are. So think about it, right? Imagine if you go into an arm day, right, and your shoulder's fucked up. If your shoulder's fucked up, you can't really work out your bicep or your forearm too well, right? Because there's some kind of dislocation in that logistics chain. So if one thing is messed up, you don't get the full effect, right? And you can't really grow on a strong foundation. So right now, if we go back to the futures, we are pushing all-time highs on a futures chart, and we're at 23,000. When we look at futures, let's take a step back on the weekly chart and let's look at the increments of economics for a moment. So in every 4 years, we get this experience, right? Here's 2020 COVID. This was the last time you would have got this position on the buy side for COVID. This is our interest rate change. This was the last time we would have got this low back in 2022. This is August's flash crash with the Japanese yen situation, right? That was the last bottom that we thought we were going to get while we were breaking this high. And then tariffs came in. And we got under that level. This could be the last time we get a bottom for this next generation, right? So now, having this picture, this is COVID's picture, this is the interest rate picture, this is our current tariff and flash crash picture. The flash crash wasn't really expected, so that was pretty interesting to have that low, but tariffs were, so all of that was planned, right? So if we look ahead of this, let's change our psychological levels to 500 increments. Okay, let's do 1,000, because those are too close to each other. Okay, so our last bull market, right? We had this. This was breaking an all-time high at this point. Back in the day, this right here, this was a bull market, and it was just running high. But eventually it stopped at a psychological level, which is 21,000, if you look over here on the right-hand side. Breaking 21,000 was a bull market again. That bull market only went to 22,000, and then it got trapped. That fell off and gave us the tariff grab, and that's pushing us above 21,000, 22,000. We are now at 23, and we're just holding 23. So what I really need you to look at here is at this point in time, this was an all-time high, and that all-time high skipped 20,000, right? Or sorry, 19,000, 20,000, and then touched 1,000. That's 3 different $1,000 levels that pushed in just that one all-time high increment. Right now, we came from 17,000. We're breaking an all-time high. This is our first $1,000 level. It's a good chance we can hold this 23 and go straight for the 24 and 25 with AI and the tariff experience. And we have a lot of like interest rate situations going on. So we are at all-time highs. And this is our psychological level that we have to deal with. Notice here, that psychological level didn't give up from December 2024 all the way until February. So it took a few months for them to digest that level and realize that they had to go down. And that was because of economic uncertainty with the tariffs. Now, tariffs are like the biggest talk. So there's no more economic uncertainty. There's just conclusion on what happens with the tariff. So can we really experience a drop-off like this again? Even war isn't pushing us down at this point. If anything, it's just profitable, right? So it only makes sense to climb these higher thousands when we talk about the Nasdaq, because it has to do with all those companies I just showed you. Apple, Google, Meta, Nvidia, and all of those companies are used in everyday technology for entrepreneurship and America, and that's where we're investing our money, because that's where our consumers are spending money as well. So if all that makes sense, that's why we're up here, and we can't just think that this is an all-time high and we have to completely dump. So overall, the bias is still bullish, but that doesn't mean you just look for buys every single day, because again, we're hanging out on 23. So now, getting into a bit of a current event situation, how long have we been on 23? So if we turn on our indicator here, check out how many days we've been at 23, right? This started last Thursday. Last Thursday we were at 23. Monday we were at 23, just under 23 on Tuesday. Wednesday, which was yesterday, we just pushed up 23. And now here's today, right? Today, Tokyo's kept 23, and we are currently just above it. And we also have a level above this 23, which is going to be 23,100. So right now, our main focus is to say, can we keep 23 and push above 23,100? And if we do, that'll be our next rocket to 200. And since we've been here all week, if we get this breakout, next week could be the reason why we push over 500 points. And we'll have a lot of students making a pretty decent amount of money.